Welcome to the Transparent FX Academy. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical monthly demand and support zone. In fact, from here in multiple occasions, the market has already been rejected to the upside with quite strong institutional buying. Every time the market tested this zone in the past, it got rejected to the upside very, very aggressively. And what we can see is that right now we are having the exact same thing happening once more. The market tested its zone and is currently rejecting the area to the upside again with very strong institutional buying. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis to see how institutions are shifting their orders. But for now, let's keep in mind that on the monthly, we are rejecting strong historical monthly demand and support. And let's drop down on the weekly time frame. Now, from a weekly perspective, what we can notice here is a perfect inversion of trend. We went from a situation in which the market was creating weekly lower lows and lower highs to then having the creation of this double bottom created exactly here at the low, which is also that historical monthly demand and support. And now the market has shifted to the creation of weekly higher highs and higher lows. So we had a perfect inversion of trend, first from a weekly bearish market to then a weekly bullish market. So from lower lows and lower highs to now higher highs and higher lows. What we can also notice is that this rejection to the upside was pretty much expected because the market was rejecting previous weekly resistance, now turned support. In fact, from here, this previous rejection to the downside was created. Again, here the market tested its zone and rejected it to the downside. Then we had the break back above the level with this impulse to the upside, which means that all this previous resistance was turned support here, again here, and again here. And that is exactly what you would usually expect in an ideal uptrend. In fact, when you have a market which is moving with an ideal uptrend, what you expect is the creation of higher highs and higher lows. But what you expect is that every time the market is supposed to go and retest the previous resistance turned support. So the previous high, which at that point becomes the new higher low, before then a new higher high. So the next logical step after the market created a high at this level, so we had the impulse correction, the market broke back above. Next logical step would have been anyway for the market to go and retest this level and then create a new higher high, continuing this weekly uptrend. And so far, that is exactly what the market did. We had the retest of previous resistance turn support, and right now the market is pushing higher. Dropping down on the daily time frame, what do we see? Now, here on the daily, I spoke about EURUSD just a few days ago after the market broke above this previous level of resistance. I explained all the reasons for which I was expecting after this impulse, the retest of this previous resistance turn support, and from here, the continuation to the upside, which is in fact exactly what the market just did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing and how they are moving and shifting their orders. Now, if we're looking at the data for the euro, we have to keep in mind that we are already looking at EURUSD because all currencies on the spot are traded against the USD. So if we're looking at the euro already, we're looking at EURUSD. And what we can notice here is that in the long run, we had a complete shift of positioning from an institutional perspective. We went, in fact, from having a negative net positioning with minus 64.4k net positions. So this means that institutions had more shorts than longs, 230,000 shorts compared to only 165,000 longs. In the long run, we went all the way up to now having 125k net positions, which means that now we have more longs than shorts. So the complete opposite with 258k longs compared to only 132k shorts. We can notice how with the last report, we had an extra 2,300 longs getting added and 3,600 shorts getting closed, making EURUSD even stronger from an institutional perspective. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, the market is rejecting previous resistance turn support. I also identified in that previous analysis, which you find linked in description, that this zone was a confluence of demand and support zone. And when you have confluence of support and demand, you have an increased probability of seeing a potential rejection to the upside, which is in fact exactly what the market did, because the probabilities of seeing more institutional longing increase. Now, in this case, that is exactly what happened. We had the impulse to the upside, and after an impulse, if you want to measure the potential correction, you have to take your Fibonacci from the low to the high of the impulse leg. Now, this impulse to the upside doesn't seem finished yet. We don't know when the correction after the impulse will start. Well, what we do know is that no market can just go up in a straight line. Every uptrend is composed by a series of impulses and corrections, and the corrections give the possibility for more institutional buyers to enter the market and push the price higher. So if the market will start the next correction from this level, at that point, what we would have is a 0.32 retracement, which is lining up with a quite interesting area. Because what we know is that this zone was the previous level of supply and resistance, from which also this rejection to the downside was created. And if the market will go and retrace to this zone, this is a confluence of support zone because we have the 0.32 Fibonacci retracement, which is at the same level with this previous resistance turn support. And inside of a confluence of support zone, there is an increased probability of seeing more institutional longing, as I have just explained. So if the market will retrace to this zone, there is good probability to see even more institutional longing, since already institutions are adding longs and closing shorts, and that would increase the probabilities even more of seeing this potential impulse correction and impulse pattern to the upside complete here from a daily standpoint. So if we do get this correction, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside and for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.